Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Philip Lee, one of Ireland's fastest growing corporate law firms and expert advisors at the heart of the Dublin and London startup, fintech, and crypto communities. On the show this week, we've got...
Hi, this is Nick Milanović of This Week in Fintech.
Nick Milanović has spent the last decade working in fintech and microfinance. He currently runs This Week in Fintech, a global digest of fintech news, and the Fintech Fund, an early-stage venture capital fund. He previously led business development and strategy for Google Pay and Google Finance, led strategy at Petal, and partnerships at Funding Circle. He also writes on fintech at TechCrunch and Forbes. In this episode, Owen Fitzgerald and I talk to Nick about what influenced his modus operandi, the global opportunity at play right now with fintech to provide financial services to more people that need financial services around the world who lack access to traditional financial services. Ramping up from a newsletter to a syndicate to now a full-fledged early-stage venture fund. Also the blurred lines between fintech and crypto, and how Nick managed to make the most of his love of music. All right here on Money Never Sleeps. Why don't we get started by you just kind of walking us through your backstory and let us know how you got to this point in what you're doing today, huh?
Sounds good. So I've been working in fintech for over a decade now, and I think that means I probably need a new hobby or a new set of interests. To hear my girlfriend tell it, it's getting really boring to just hear me talk about fintech all the time. But why I was happy to talk to you and why I was really interested in coming on the show, and thank you so much for the invite, was, I spent the last 2.5 years building up this newsletter audience, and most recently launched an early stage fintech investment fund last month that kind of builds on this 10-year track record working in this space. But I think it's a particularly interesting time to be working in fintech because, as you know, as well as anybody else, people working in fintech and fintech VCs have spent the last 15 years saying, look, fintech's going to eat financial services. And I think for 13 of those 15 years, everybody said, yeah, right. We'll talk to you when you're big. Well, now fintech's finally big. You see platforms that are bypassing banks in terms of number of active users. You see fintech companies that are valued more highly than bulge bracket fintech banks. And what you see because of all this growth is this really rich ecosystem where more talented and bright people moving into financial services, and people who otherwise wanted to build the next social app are now saying, well, actually, there's more interesting applications in financial technology that I'd rather be working on. So I think it's a super active and exciting time to be in fintech right now. And so that's why we started the newsletter 2.5 years ago. That's why I started the fund. And we're working on a couple other community-focused products this year that I'm pretty excited to launch.
Absolutely. Oh, it's great. And looking back at your background on your LinkedIn profile, and Owen and I keep joking, we got to get LinkedIn as a sponsor for this podcast because it's basically what we do, right? Is that seeing your time at Stanford before you got into fintech and studying philosophy and getting into being a researcher on poverty and inequality. When I looked at kind of Nick online as best I could, what I saw was this continuing theme of make the world a better place and community themes as well. And were there one or two life experiences that might have ended up pushing you in that direction and kind of trying to connect the dots from that, philosophical student experience to what you're doing now?
Very good research. The modern day job market for philosophy is not as deep as you'd want it to be as a philosophy major. So,
Absolutely.
That was kind of, out of scope for my job prospects coming out of school. And in philosophy, you have all these grad students involved in the program who are super smart and just deeply cynical about working in philosophy. So I knew in undergrad that I would need to come out of school and actually find a job. When I was in high school, in econ class, I loved economics. I thought it was such an interesting study of how people relate to money and how they act around the allocation of resources. Well, I had a teacher who, rolled a TV into class one day and said, today we're going to watch a movie, and pulled up a documentary about this nonprofit called the Grameen Bank in Bangladesh in India that was doing these social lending and saving circles. And it was started by, Muhammad Yunus, who ended up winning the Nobel Prize for basically founding, microfinance. And for the first time, I said, this is so cool. There's a way to tackle poverty and inequality and the social allocation of resources, not just for rich people, but at every single level of the ladder. That's not reliant on a nonprofit or a government donation program, but actually, relies on the incentives and market forces of a lending group, in areas that banks aren't willing to lend. So I always thought that kind of theme of capturing market forces to create social good was really interesting. When I went to Stanford, this is what people started calling social enterprise or social E. Is creating an enterprise that harnesses market forces but does it for a good cause. And so I actually worked at a microfinance institution called the Opportunity Fund in California, working with them to evaluate their loans. And it was kind of my dream working in microfinance. But what I realized is that with a lot of these nonprofits, you still have these grant-funded institutions where like every year there's an existential risk that your grants dry up and that all the good that you're doing, becomes unraveled because you can't make budget. So if you have an economic downturn and all of a sudden your grant donors decide, hey, we don't have the budget to finance this program anymore, the safety net that you've helped create for individuals, for businesses kind of dries up. So I think that kind of helped me go through this mental shift where I said, what I really want to work on are businesses that are profitable and, stand on their own, but focused on creating economic opportunity. And that's what got me into fintech to begin with.
I get it. I'm seeing a few parallels with other people that we've spoken with, Nick and Owen. I'm thinking of Ollie Walsh, where his business is, he talks about financial inclusion not as a charity, as a business model, right? And that can you provide financial services at a cost that makes it available for people across the world and not just people who can afford it. They could cost something like £1,000 every year to be poor in the UK, right? Because you don't have access to the same types of things that others do. So, and that, keep your costs of running your business as low as you can so that you can make those services accessible, but you're still going to make a profit off of it. You're not running a not-for-profit business. You're running a for-profit business. That is, I get where you're coming from now. I totally get where you're coming from.
I'm a big fan of the newsletter. And one thing that strikes me from it and everything is that community piece that you're working on. What made you start with the newsletter, and then was it trying to build that community in the fintech space?
People always ask about the 5-year plan as if there is one. Okay, this newsletter is the first thing, and what's the long-term vision? And I would like to say that there is kind of a long-term vision, but really each piece individually builds on itself, and it's all about being thoughtful about how one benefits the next, and this grows in terms of concentric circles, rather than kind of like some, far-flung 10-year vision and roadmap. So the reason that I started the newsletter originally was actually for my team at Pedal. We were building a credit card that could use the cash flow in somebody's bank account to underrate them for credit without needing to reference a credit score. It could enable, Pete, to your point on financial inclusion, can enable a ton of people to have access to an unsecured credit line that wouldn't have been able to before because they didn't have a credit history or because their credit score was low. And what we found with the team was there is no one good, easy weekly place to go and get all of your fintech news. People would always be wondering what's going on, what other companies are doing, what's their competition look like this, but there wasn't like one kind of central repository. So I started sending around an email to my team there and then forwarded it to a couple of friends who worked at other companies. And they said, oh, can you subscribe into this? I really want to follow along. And then I realized, well, this is actually like a bigger thing outside of just Pedal. There's a huge fintech community now, but there's not one kind of resource for keeping tabs on everything going on within that community. And it's growing and it's getting more dynamic and there's so many different projects. And so it's hard to keep track if you're just, trying to ingest, TechRich articles. So that's where the newsletter started about 2.5 years ago. It went from private to public and then started scaling, and we've never done advertising for it. We don't really do referral campaigns or anything. It's just grown organically through word of mouth, which I think is, something I'm the most proud of. Is that it's grown that much. It's not just my mom, reading it anymore. But, kind of back on the theme of each piece building on itself, when you put something out there, like any product, and you see how people use it, you start getting ideas for what the next product should be. So I had the newsletter running and I had a lot of people reaching out to me, and there was kind of two sets of questions. On the one side was fintech founders getting their companies off the ground saying, hey, you probably have a lot of fintech readers who do angel investing. Can you put us in touch with people who understand fintech who want to invest in a new founder? And on the other side was people who had been working in fintech for a while saying, hey, I'm looking to find new founders to invest in. Can you connect me with any of them? So about 1.5 years ago, I put together an angel investing syndicate. It's largely the same community that, reads the newsletter that we interact with on Twitter and LinkedIn. And now we're about 150 people, and we've invested about $2.5 million across like 40 companies out of that syndicate. And so that grew, and it's just like another way to engage with the fintech community. And at the 1 year mark in the syndicate, I said, okay, let's look at what's going well, what's not going well. What had been going well was we had this great group of people in the syndicate, and we felt like we were backing this great group of founders, but everybody was writing, personal checks, myself included. And so the money that we were investing, a founder would come to us and say, we want you to invest X. And we'd say, well, okay, we can meet you here, but we can't invest all that. So that was actually what the genesis was about, 8 months ago for the fund, was putting together a capital vehicle where all the money is still coming from people with deep fintech expertise. So if you look at our LPs, most of them are individuals. They've been working in fintech for a long time. And so what we want to do is aggregate all this fintech firepower and put it behind founders, where the check size is really what matters. We're able to invest between 150 and 300,000 in each company that we invest in, but it's really the expertise that you get and the development of this network, where you're creating connections between new fintech founders and fintech vets who've been in the space for 10, 15, 20 years longer than I have. So that was kind of the next item that we just launched about a month ago. But what I'm really focused on this year, besides responsibly and thoughtfully deploying the fund, is launching a couple other community focused products where This Week in Fintech has kind of been a loudspeaker. It's kind of been a broadcasting product. But what we want to do this year is start strengthening atomic community connections and really putting fintech people from different communities in touch with each other in a way that collaboration can drive a lot more innovation in the space, hopefully.
Because I see you've obviously the meetups have been running. They started quite recently, I think, didn't they? And you've expanded those, because I obviously followed the newsletter, and then there's the UK-Europe newsletter. And then, because I was reading it this week, you had the Fintech Women's Networking and Happy Hour in Mexico City. So there's loads of events being kind of spun up around it as well for the community.
Yeah, we started doing events in person about 10 months ago, and really it was almost by accident. Again, it's kind of building one thing on the other. But we were coming out of lockdown in New York, and I posted on Twitter, would anybody be interested in a fintech meetup? And the response was overwhelming, not just from people wanting to attend, but people wanting to sponsor it. And so that grew into a set of events where we had a black tie charity gala at the Boathouse in Central Park at the end of last year. That raised something like $20,000 for a group of charities. And it was all, kind of spun up at that first, Twitter comment and the resulting event. So, it's important to say, this has not just been my effort. Christine Chang, our Latin America editor for This Week in Fintech, who writes the Latin America edition, has done an amazing job, not just hosting meetups in Mexico City, but also putting together women's networking events, which I think are really critical in a lot of Latin American fintech markets where it's a little bit of a newer community. And so what we're looking to do this year is replicate that, not just in Mexico City, but women's networking events in Bogota, Buenos Aires, and Sao Paulo, and in other Latin American fintech markets. Michael Jenkins, who's our European and UK editor-in-chief, he writes the UK edition you referenced, has done an awesome job hosting in London. And we're looking at hosting in other European cities to bring those local communities together. And I definitely need to shout out Christina and Katie, who are our two event leads for the last year, who worked tirelessly to make a lot of this happen. It wouldn't have been possible to have a lot of these in-person events without them. We've now had over 80,000 people come to our events. I just got back from a week in Africa where we had events in Kampala and Uganda, in Nairobi, Kenya, and in Cape Town, South Africa. And so the common thread here is what we're really trying to do is there's all these atomized, deeply passionate fintech communities. We want to start creating a horizontal layer. Part of that's offline, but part of that's also going to be online, where we start creating the fibers to really connect them. Because I think that there is so much contained siloed knowledge within people, within communities, that we can open source in a way that helps fintech develop even quicker than it is today.
Yeah. I was thinking about that because you can go through all of these incredible efforts to connect the community, and that, sometimes the connections are just serendipitous, right? And that how can you actually do some of this on purpose and organize it and connect those that probably don't know each other, that are in different parts of the world now that the world is operating in a fully virtual way, or has an option to operate in a fully virtual way a lot more than they used to. But organizing that in such a way that every single connection point that folks at your events have, that people that read your newsletter, people that invest through the syndicate, people that invest through the fund, all of that, trying to find those touch points seems like a giant Monte Carlo simulation sometimes, right?
I totally agree. I think if there's one thing we want to do, it's be a stimulant for serendipity in the space, create the forum that enables those kind of connections. So I was in Kampala a week ago, and somebody sent me a note on LinkedIn following up from that event, where it was a screenshot of another conversation, and the conversation was a product manager at a separate company reaching out to them and saying, "Hey, Nick Milanović at the Kabbalah told me about what you're building. I think you could be a really good fit for our product offering. Like, would you be interested in talking about a partnership?" And that it meant a lot to me to have him forward that and know that the event created a connection that could be material to this person's business. And for every forwarded screenshot of a conversation I'm getting, there's probably hundreds of other people who created a connection, and they're on the job market looking to get hired, and they met somebody who they want to work for, or they're looking for a co-founder and they met them at an event, or they're looking for an investor and they met them online through This Week in Fintech as part of the online community. I think that the opportunity to take all these kind of atomized centers of knowledge within Fintech and connect them more meaningfully is going to be really material to the next 10 years in this space.
Yeah.
I think it strikes me, even from us chatting, and I know myself and Pete, as a sector, it's probably one of the more, I suppose, there just seems to be more passionate people involved or willing to be involved or wanting to be part of communities in this particular space. And that kind of strikes me, because anyone that myself and Pete work with, or like, everyone is passionate about fintech and the continuing opportunity in it. And that's clear by obviously being able to spin up these events and having so many people attend them, and the growth of the newsletter and everything. And that even though it's been, like you said, you're over 10 years in it, we're 10 to 15 years ourselves, it still seems to be like it's at an early stage and people are still passionate about the opportunity.
Yeah, there's definitely some tailwinds working in our favor. And we probably wouldn't be as effective as we are without those tailwinds. One of them is, as we were talking about at the beginning, like the scale of fintech now. 10 years ago, you could be building an online lending business and nobody would really care. If you wanted a loan, banks were providing 99.9% of loans. And then online lending platforms took off and started, eating a material amount of that business. So I think the scale has really been a tailwind, because people think for the first time, like, okay, the size of the pie is actually as big as the financial services pie. And that makes people really passionate about working in fintech. It's kind of like an underdog mentality, but realizing how big the opportunity really is, and then it's finally within reach. And I think the other thing is, for better or for worse, this pandemic really normalized online relationship development, whether it's hanging out in Clubhouse once a week or pitching a venture capital firm remotely and getting a term sheet without ever having met them. People are much more willing to create relationships online than they were even, just 2 years ago. And so you have people who, Owen, to your point, like, no longer think of themselves like they did 10 years ago, where they say, well, I'm a PayPal employee or I'm a Robinhood employee, but they think I'm a fintech person. And I move between companies, but those companies are all fintech companies because, like, that's what I'm passionate about. And I think that mindset shift is really important for creating this super engaged community of people who collaborate kind of across party lines between companies. And so This Week in Fintech Fund, like, what we're hoping to be is a very flat organization, where what we do is create the fibers that connect all these different companies and different people in a way that is positive sum, where people don't think they have to compete between companies necessarily, but they can be open to connecting, because when we connect and learn from each other, that's where a lot of the best innovation happens.
Yeah,
absolutely.
Yeah, I'm with you. There's an interesting kind of, it's not really a polarity in all of this, but it is, two sides of the same coin, in that those that had been in financial services, traditional financial services, for a long time, look at fintech and say, oh my God, this is such a better way to do things, or it's so much more efficient, or look at the margins that we should be able to achieve by building financial services on top of digital infrastructure and digital technology. And then there are those who are coming at it from a different perspective that say, look at the amount of people out there in the world that financial services has not yet touched. It is such a massive market. And it's like the ops and efficiency geeks are looking at it like, oh, I can save money with how I deliver financial services. And then there's others that are saying, well, we can deliver more financial services to a lot more people in a better way, right? And those two sides of it. And I know where my initial leanings came from being the traditional finance guy for a very long time. But what I've had to learn over the last 5 or 6 years is to look for those opportunities to reach more people and to sell more and to help raise the curve, really. I kind of got an understanding from what we talked about a few minutes ago on where your leanings are with this, but how do you see it?
One of the first cities that saw large-scale adoption of digital payments was Mogadishu in Somalia, where you have a lot of merchants who would collect cash for whatever they were selling, They would live outside of the market centers. They would go to market every day to set up shop, collect cash for what they were selling. And because security was an issue in the city, frequently be the subject of robberies. And when it became possible to collect payments on their phones in a way where the payments were deposited securely onto a bank account that couldn't be accessed without the right credential information, these merchants became mass adopters of mobile payments in Mogadishu. So if you are bringing something to the market center in the center of a city and then you're going home afterwards, you're no longer a liability because you're not carrying all the cash that you just got that day on you, and you're not, a target for robbery. And the reason I bring that up is there are so many stories like that where the introduction of like a very simple but effective financial innovation can have a radical impact on the lives of people who really need it, who are overlooked by the traditional analog financial services ecosystem. So I think, you have like Finance 1.0, which is, everything before PayPal, basically, where it's analog banks that are providing, necessary, plumbing for the functioning of the world, but all, offline. And then you have the advent of the internet, and that creates this, Finance 2.0, where all of a sudden digital financial services create entirely new possibilities, new product constructs, new business models. And, what you see over the last, couple of decades is PayPal and Stripe for collecting online payments, Robinhood for, group social investing, all these different constructs, where you can lend to somebody online through Kiva who lives in a, different part of the world that you'll never see or visit, but you were able to impact because, this online platform allows you to do so. And so, something that you had asked in your email that I think is a very astute point is, where do things go from here? What do decentralized finance and crypto mean for this space? And so I think that there is, a Finance 3.0 where decentralized rails and programmable money allow us to build entirely new exotic products that we never would have been able to build beforehand. And so a lot of fintech is effectively like a user interface innovation where you are building a simpler, easier to use, cleaner, more accessible product on top of existing financial infrastructure. But the promise of, DeFi is let's take it a step further and build an entirely new infrastructure. A lot of the architecture that we use is built for the analog phase of Finance 1.0. Let's make finance really digital and, as easy to move money around as it is to send an email, and as costless and as low latency, and make money programmable so that if certain conditions are met, money acts differently. And so, we're at the very, very beginning of that revolution. But I think it's just like one more step in the right direction for creating these kind of radical impacts in people's lives, like the ones that, merchants saw in Mogadishu when they first started collecting digital payments. And just so it doesn't seem like that's kind of like one isolated example. I just met this woman who founded a company in Sudan in the last year called Al Souk, focused on electronic payments across Sudan, and raised $5 million in a place that's not, conventionally known for having a startup ecosystem, at least for us here in the Western world. But what she's doing is really amazing. Because of sanctions primarily, there's a really lack of depth of different payment systems and networks that, cannot operate within Sudan. So she's basically building financial rails from the ground up for the first time for people to be able to accept digital payments. And, it's these kind of fintech products that, wouldn't have been available in the Finance 1.0 world that I think are going to be really continue to be transformative, for the next decade and beyond.
Absolutely. Yeah, it's crazy that we're talking about this right now because I mentioned Ollie Walsh, who in terms of financial inclusion, he runs a business called Pipit Global here in Ireland. And Pipit's mantra is that we enable migrants to support their families back home cheaper and safer by effectively digitalizing cash in the host country where the migrant lives when they're sending money back home and it doesn't need to go through Western Union. He is actually pinging me right now on Slack as we're having this conversation because he is thinking about the blurred lines between fintech and crypto and stablecoins. And it's crazy. And he's going to listen to this on Friday morning when it actually hits the podcast world. And but shout out to Ollie nonetheless. Hey everyone, this is Pete. Let me tell you about the folks at Philip Lee. A few years ago, I was at my first venture capital industry dinner in Dublin, and honestly, I felt a bit lost. I bumped into Andrew Tizali, one of the partners at Philip Lee. He bought me a pint and introduced me to the team, and they took me under their wing. That take you under their wing approach has been what I've heard consistently from fintech and crypto startups who I know have worked with Philip Lee in Dublin and London to help them wrap the right legal framework around their business, fundraising, and regulatory needs. And I can't recommend them enough. Get in touch with the team at philiplee.ie or on moneyneversleeps.ie/philiplee to learn more. Just, I wanted to go a little bit deeper on that for a minute, Nick, in that I saw in the Fintech Nerd Collective that I know you run as well, that there was a question on there that if you were to set up financial services in an emerging market, would you set that up on traditional financial rails, or would you set that up on digital rails, crypto rails, stablecoin rails? I didn't see your answer to that question, but I think there's a blend of the two. Is there?
I'm glad you didn't see my answer because it was kind of a throwaway answer and I wasn't very proud of it. But there are a lot of really, really well thought out and articulated answers that were not on there. My answer is basically like you need to build for backwards compatibility. But I think it's a good question, and the answer, like frustratingly enough, is it depends. There are some super exciting developments in different countries around the world where you see that regulators, central banks are actually moving in this direction. So you have the development of, in India, a universal ID system called Aadhaar, which in turn enabled a universal instant payment system built on digital rails called UPI, the Unified Payments Interface. And that in turn is enabling digital credit infrastructure. We have a credit stack called OSIN in India, and all these pieces build on each other. So you're starting to see similar ones in other countries like PIX in Brazil, for instance, digital payments. And the kind of topic of the day for most central banks now is, do we go a step further and develop our own central bank digital currency? Do we enable a digital dollar that is accessible fully online in a way that, you can move a dollar between accounts and across borders at with zero time needed for the transfer to happen and zero cost? Can you, program the digital dollar so that it has different features depending on its use case? Can you use digital dollars to enact direct, fiscal and monetary policy? So like, can you give unconditional cash transfers to families that fall below the welfare line by, making digital deposits to their mobile phone? Can you enable digital dollars that basically pay for stable goods so that, a family doesn't necessarily need to go to, collect their EBT, welfare benefits in person at an office and then take the card physically to a grocery store and only qualify for like a set list of purchases. But you can do this all digitally, using a digital dollar. These are like a couple examples, but like there's so many different ways that you can make money work more effectively for you if it's not like this, paper index of value, that's fungible across like all use cases.
Absolutely.
That example you gave just there is really interesting because Peter Lowe, I was talking to a good friend of the show, Niall Dennehy. A shout out to Niall. I was talking to him on Monday. He's the COO for a company named AidTech, which is one of our favorite, I suppose, companies that I've been working with in the blockchain space. And they do digital identities, but their solution and their partnerships are with like the Women's World Banking and a few others, a lot of NGOs around the world, whereby, to that example, refugees are given a card with their ID built into it that they can then take to a Walmart or whatever, and they have a list of approved items that they're allowed, or that they have been, the money is there for them to pay for. The funding is there from the government or whatever, or similarly with their welfare payments, that sort of thing. So that's a fascinating example, and we've been working with them for 5 years. They're getting further and further involved and rolling out bigger projects in different parts of the world with that in mind, that people who have no ID, even in some places, depending on if they've been displaced from their country, are able to now, be set with a government ID in their new country that they're set up in and start to kind of build upon that.
Yep. I'm getting a real feel for this. Love it.
Yeah.
I love it. It's wonderful. Shifting gears a little bit, Nick, looking at when you announced the launch of the fund back in January in the TechCrunch piece, there was a long list of impressive investors in there. And I know we've talked a lot about, your community and how you built that up. But was there a special kind of brain shift that you had to do for yourself from moving from I am connecting people to I am investing people's money?
It wasn't kind of as big a departure as it seems on the outside. I'm lucky that 18 months of running the syndicate gave me an investing track record where I could point to the quality of founders that we were able to identify and back, and that at least paper outcomes for those deals getting marked up. So there was a little bit of a track record to go off of, but I'm very lucky that in writing this newsletter and in working in fintech at Funding Circle, at Pedal, at Google, I've developed this network of people who believed in me and, kind of believed in my thinking and rigor and decision methodology, and were willing to back me, and support me financially by being investors in this fund. We have something like 75 LPs. A couple of them are funds, but for the most part, it's this long tail of individuals. And I'm incredibly lucky that, I have their support and that they believe in me enough to make this fund a reality. It would be possible without a lot of them, not just for dollar reasons, but because they were willing to make introductions. They were willing to, answer questions, and be advisors and mentors to me. When I started raising the fund, I had no idea if people were just going to laugh me out of the room or not. And the first person to write me a check, somebody I'd known for a couple of years, and I emailed him with this fun pitch deck, and I was very nervous, and he replied within about an hour and said, "I'm in, count me in for this much." And getting that validation for the first time, like having somebody believe in me, like it didn't even matter what the dollar amount was, but just that somebody, who wasn't me said, "Yes, you should do this, and I believe in you, and I support you, and I'm going to invest in you," made a ton of difference. There have definitely been ups and downs since I started, going out and talking to people about fundraising like 5 months ago. But those little moments of like validation and getting somebody else to believe in you, I think make it all worth it.
Yeah, absolutely it does. And I was talking to a founder on the other side of it that was raising money for their business from VCs, and they did recently 120 investor conversations over the course of 8 weeks to get 5 yeses, right? So, hopefully you're, based upon the relationships that you had built, Nick, that the ratio was a little bit better than that, and I expect it was.
Not much better, honestly.
Okay.
I've developed a lot of founder empathy over the last couple of months fundraising, and I've been on the other side of the table too. I've been in the fundraising conversations for startups that I was at, and talking to VCs. So I know how much of a slog that process can be. It's a sales job like any sales job, and you have to take the no's and move on from them and not internalize it. You have ups and downs. You have a lot of people who don't get your vision and don't believe in it. And then you find that one partner that really does, and that makes all the difference.
And what's the area of focus? And obviously, you've been doing the syndicate, so you've built that track record. But in terms of the future and where the fund is going to be focused on, is there any areas in particular?
So it is going to be globally focused. I think because of the strength of our network, the majority of deals we do will be in the US, but we've financed a company in South Africa. We've done 2 in India. We're doing 1 in Pakistan. And I think that there are a lot of super interesting opportunities outside of the US that are like more 0 to 1 than they are in the US, which I'm excited about. And then there will be like a little bit of a bias towards service providers and B2B and infrastructure rather than consumer. The reason for that is that a lot of the indicators of a successful consumer fintech company, like user growth rates, monthly active users, churn, retention, affinity, cost of acquisition, like you don't really develop those at the stage that we're investing, which is pre-seed and seed. You need a little bit more of a track record to understand if something's going to be successful or not in the consumer space. And so, I don't think it's necessarily easy to make consumer bets where like so much of it is like reliant on brand when you're super early on. So there will be like a little bit of a slant towards infra and away from consumer. But for the most part, there actually isn't really a thesis for our fund investments. And it's funny when you tell this prospective investors, seeing how people react. Some people really want you as a manager to say, "This is my thesis. These are the 3 things that are going to happen in fintech in the next 10 years, and this is where we're going to focus." And I think that, especially for early stage investors and emerging managers like myself, that's a little bit of a mistake. Because what happens is when you sit down with thesis and you say, "This is my belief about how the world's going to evolve," you go out and you just look for founders that pattern match to your own biases. And people who are also building within like kind of the thin swim lanes that you've created for yourself. So maybe you have like 3 theses and there's like 2 good founding teams fully in each. So you identify like those 6 founding teams and back them. But then there's a lot of less than good founding teams that are also building within the swim lanes you identified. And so because you're not really as focused on finding great founding teams, you're just focused on, finding people who confirmed your own biases, you end up going and backing a lot of teams that like meet your thesis, but are not necessarily like the best teams to be tackling that. And while you're doing this, you miss a lot of the innovation that occurs outside of those swim lanes, or, a lot of the innovation that doesn't pattern match to your theses. So rather than kind of taking like a strict thesis-based approach, what I'm doing is I'm going out there and leveraging this newsletter and the network and the events to put myself in front of and meet with as many founding teams as possible and identify the really, really great ones and say, these are the teams we want to back. A product that's to pivot a couple times. Great teams are able to pivot their way out of sticky situations to building truly resilient products. It just matters how quality that team is. And the most exciting thing to me is when I meet founders working on something that I never thought of before in my life, working in an area that I didn't even consider interesting, but they're deeply knowledgeable, they're deeply passionate about it, and they can really teach me something when they're pitching. I've got to go and validate everything that they tell me. But those are the founders that I really want to back, is people who say, this is a massively overlooked problem that nobody cares about, and I'm actually working on a novel solution.
Yeah. Tough question for you. And maybe not a tough question, but because I'm up against this right now, Nick, absolutely right now. And I went through this in the last few weeks, that incredible founding team. You absolutely love them as a team, and I'll make this point relevant for you rather than me, but their product, their direction, where they're starting from and where they're going is probably more general B2B SaaS than fintech. What do you do?
You point them to the CB Insights article that said 2 out of every 5 venture dollars went to a fintech company in the last year. And you say, pivot to fintech.
There you go.
Backers.
That's it.
Yeah, I know. Yeah, that was my answer, but I still had to say no to some wonderful, wonderful entrepreneurs and founding teams. I know. I'm with you. Listen, we covered a lot of area tonight, Nick, and really appreciate that. And I'm going to ask you, or actually I'm going to let Owen ask the final famous question that we ask everybody on this podcast, because he's the one who came up with it. But Owen, please do the honors.
And the reason we ask is it's always interesting if we go back over all the episodes, the very random things that we've had people tell us over. I think we had someone who was a trained midwife as a fireman. He delivered a baby, and there's all sorts of weird stuff. Myself and Pete have our own strange ones. But the question I always have to ask is, what's something people wouldn't expect to know about you?
It's a good question. I only spent so much time cleaving off my professional life and my personal life. But I've been a DJ for 12 years now. Not in any giant sense. But, I learned in college and then just kept playing, as I got older. And the reason for it is that you can probably see this guitar hanging behind me. I love music, but I've always been terrible at playing it. I've got an awful singing voice. I can't play a single instrument to save my life. And I tried so many: drums, trumpet, harmonica, guitar, and I was just awful. But music's always meant so much to me. It's been such a big part of my life. And, it's something that I connect with so deeply. And that learning to DJ was great because it finally gave me a way to express music without necessarily being talented at all at instruments. And so I spent the last 12 years DJing. I quit my job and went backpacking for 9 months in Asia and Africa. And there were a couple different points where I showed up to one place and somebody gave me an offer to just stay there and DJ. And I thought, maybe this is where the rest of my life goes, is I move to Malaysia and become a DJ there. And so I'm happy that, my path took me here, but I always think about whether if I really put my foot on the gas, I could make a career out of music.
You could. Do you have a DJ name, Nick?
No, I don't. I'm always between names. And if you can think of a creative and clever one for me that's more creative and clever than naming your newsletter This Week in Fintech or naming your phone Fintech Pod, I would love to
all right.
Steal that creativity.
We'll come back to you on that one.
We will come back to you. We're good with stuff like that. But listen, brilliant. Nick, awesome to have you on the show. Thank you so much for joining us. And best of luck with the fund, with the events, with growing the community, with digitalizing all of that and making it something that truly drive more and more, not only intended connections, but serendipitous connections as well.
Thank you, Pete. I really appreciate you having me on the show.
That does it for this week, folks. Thanks to Nick Milanović for opening up his mind to help us figure out why he does what he does. Links to get in touch with Nick and learn more about This Week in Fintech and the Fintech Fund are in the show notes on our website, moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early stage startup investor and advisor focused on where fintech meets crypto and crypto meets Web3. If you'd like to talk to me about your business, drop me a line on info@moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya.
Money never sleeps, pal.